Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, quick caveat. Anything said in this piece is for media publication only. It's not financial advice, not investment advice. So let's kick off. So the markets in the last couple of days have rallied. The Dow's rallied more than 5% in the last couple of days, all on the back of an ISM Manufacturing Index report on Monday. What the report actually came out was less than expected. In other words, it dropped below the number 50. Anything above 50 as far as manufacturing index in the US of 300 manufacturers. Survey of 300 manufacturers came in less than 50, and that immediately gave a huge amount of confidence and boost to investors, thinking, wow, if it's less than 50, then the Fed, which is the central bank in the US, is not going to raise interest rates, because it showed there's a slowdown in the manufacturing index of those 300 managers that go out across the board and are an indicator as to where the US economy is going. And because it came in lower than expected, everyone got overexcited and everyone's gone and pushed the market up and really strong gains on Monday, Tuesday, and Wednesday. It fell off a little bit. Let's talk about Monday and Tuesday. Okay, that is a classic bear rally. Okay, a bear rally is where you have a bear market where the market's going down, and then suddenly within the market going down, the market will jump up. Okay, so it can suck in investors and suck in traders and then spit them out later on. Yesterday was a private sector jobs report, which was stronger than expected, and that sent the market from the highs down. Okay, so you've got a lot of impetus, a lot of focus on economic numbers. If the economic numbers are slightly out or slightly there, that has a big impact on financial markets. So be aware of that. So that's a classic bear rally. So overall the trend is down, but within that trend going down, there was a bounce up within the financial markets. Okay, looking furthermore at Tesla, Elon Musk, and buying out Twitter. He's decided to go ahead, buying it $54.20, made a big announcement. Twitter shot up to a 12-month high and more or less was suspended because Elon Musk is going to go ahead and buy out Twitter. Oil. OPEC is cutting production for beginning of next month by $2 million barrels a day. Now remember, if Joe Biden, he ran over there back in June, July to negotiate with the Saudis to boost up oil production so petrol would go down, gas would go down in the States, and that would help him with the elections. But it hasn't helped. The Saudis basically have said to him, get lost, and OPEC is putting up or cutting production by 2 million barrels a day in order to maintain the price of oil. Oil has jumped to $88 a barrel, and it's likely to rise further because what the Saudis want and the rest of OPEC want, they wanted a minimum $100 a barrel, and already in the gas pumps in the US, the price has begun to rise again, and that's not going to bear well for Joe Biden if he's aware of what's going on. I'm not too sure what he's aware of going on, going around shaking people's hands that don't exist and mentioning people that are already dead. So it's very strange goings on there. Regarding the rest of the market, gold is interesting, gone above $1,700 an ounce. It's up to $1,715. So is this going to be a gold rally? Well, gold came all the way down to 1623, hit 1675. From there, it's bounced up, so there's good support at 1675, and it could move on from here under the precious metals. All the precious metals have bounced off the lows and had a good shoot up. So anyone who deals in precious metals will see that gold and other precious metals have actually gone up. I expect the market to move down over the next few days because I don't believe in the bear rally. It's more or less like a dead cat bounce, and we'll see on Friday with the non-farm payrolls which direction the market's going to go further. What else have we got to discuss? The dollar is very, very strong. The pound came up significantly yesterday because Liz Truss is just giving, the Prime Minister of the UK, Liz Truss, is giving absolutely no confidence to financial markets and no confidence to the analysts and the economists by saying she's adamant that they're going to continue with this pushing of this program of releasing money into the economy, and that's just going to feed into inflation. She's making a big mistake. What she should be doing is cutting back. So the pound fell on the back of that simply because they're worried about further recession within the UK. Regarding cryptos have been bouncing around the 20,000 level. Bitcoin, remember, I've been calling it short. I've been saying it's likely to go down to 15,000, but because the markets all shot up, that pulled up Bitcoin and Ethereum and the other cryptos, but they're likely to fall and continue fall going forward. Don't be fooled by this bear rally. Let's keep going about the bear rally, because it tends to fool people and pull people in. What else have we got? We've done commodities, we've done FX, we've done equities, bonds. Bonds jumped up yesterday by 14 points. What's interesting is mortgages now are at mortgage rates in the States are at a 25-year high at 6.75%. In the UK, the cheapest 5-year now is 6.07 is the 2-year. The cheapest 2-year is 6.07. So the mortgage market and the mortgage starts is the lowest level in 25 years, and that is a bad sign for the property market. Remember, I've been saying that even though there's small cracks in the property market, it's going to get bigger, and there is going to be a downturn in property over the next 12 months. Don't be fooled by that. It's definitely going to go down because rates are going to continue rising. So we've got 6%, some of the lowest amount of the lowest mortgage applications in 25 years, and the highest rates since 2007, and they're only going to go higher. That's it for now. This is Mayor Valensky with Driving Market. Subscribe, pass comments, more than happy to speak to you and comment, etc., etc. Have a good day.